what we've seen is Trump was elected, and this new administration came in, and they have been very pro crypto, pro Bitcoin. They immediately came right out of the gates, and he issued an executive order within weeks of starting his term, and that executive order was to establish a Bitcoin strategic reserve. And so that was supposedly a kind of a gating event, and that Bitcoin would rally off of that. But it didn't rally; it fell, and so it was confusing to people, the outsiders. They didn't understand what was going on. But really, what was going on is that the Bitcoin investors and people who were speculating that that strategic reserve would include some sort of measure to buy Bitcoin. Okay, so but there was no measure to buy it. There's only a measure to add to it in a budget neutral sense, or in a budget neutral way. So Bitcoin dropped. So what we've seen is Bitcoin, after Trump was elected, had a great run to all-time highs of just about threw down first. And now it's found a spot where it's going to hold steady here. It's really found a bottom. It's already had that local bottom. And that's the question. And that's what everybody's trying to figure out.
Yeah. And I think everyone's assuming one or the other, but I don't think we'll know yet for some time. I'm curious, at what point do you think we can look back and see and guess which one of those it actually was? Because we don't know right now in the moment. It's too early to say, but what are you looking for to see, okay, this actually was the former or the latter?
Yeah, because the last time Bitcoin really did this in earnest was when Silicon Valley Bank collapsed, and the market started to, the general market sold off hard, but Bitcoin rallied after that. And so, the question is, did it rally because people were assuming that there's going to be money printing to kind of paper over the problems, the banking problems? Or did it rally because people were concerned that, look, I've got money in the bank. Clearly, my deposits could be wiped out, and we're on that path or not.
And is that personal, more or less range? Or because I'm trying to get in your head about, other hedge fund managers and, people managing billions and billions of dollars, like at what point would those people start to recognize what you're saying? Is it that months and months, or will they want to see quarters or years of sustained divergence?
Yeah, I think for the very traditional asset managers, you make a good point. They're going to want to see possibly quarters and years until they'll sniff it out, though. The hedge funds will sniff it out first because they're a little bit more nimble and quicker on their feet than the traditional endowments and pension funds. But I think that's right, that you're going to have to see a sustained decoupling, but it also has to be the reason why. Like, why is it decoupling? Is it because of something like Silicon Valley, where you're realizing that this is a true store of value that is scarce and that people are turning to, as opposed to this is a risk on asset that's the fastest horse in the race that people are turning to as a store of value? But really, it's driven off that expansion of the money supply if it's a risk on asset, because you can see the same thing as the NASDAQ does the same thing. It follows it very closely, the money supply expansion and contraction. So the question is, if there's $900 trillion of assets in the world, investable assets in the world, which I just spoke about, then is Bitcoin gaining share of that? Is it getting larger as a share of those investable assets? Or is it just following the expansion of the money supply, that it goes from 900 trillion to 1 quadrillion to 1.1 quadrillion? Is it just following that? So that's the question. And as adoption continues, is it breaking away and saying, this is now a separate asset, a store of value? And really, to answer your question about institutions and pension funds and endowments, the traditional money managers, the real traditional institutions, it's when do they start to understand that Bitcoin is not a risk on asset? When do they start to understand that it is truly a separate store of value? Now, if you have an on-ramp to an exchange and you're able to buy stable coins, the stablecoin legislation is important because it'll show it will allow it will create that set of rules around anybody owning stable coins, institutions, and all, like we talked about, individuals. And that the stable coins just own, what do they own? They own treasuries. So that's really important first. And I think that's what they're focused on right now. Then you've got the Bitcoin Act, right? And then you've got what Andrew Hone is talking about, which is the Bitcoin bonds, right? The BIT bonds. And so how does that happen? Well, again, broader understanding in the government about exactly what Bitcoin is and why it is so important to hold and to get access to as an asset on your balance sheet. And by issuing those bonds and using some probable path as continued volatility, which means that it's not stair step and it's not just a jump up to the next plateau. It's more like this. And then you'll see one big jump up from that volatility, and then it'll form that new plateau, which is kind of like what we've seen recently. You have the volatility up to 60,000, kind of held that plateau. You have volatility now to over 100,000. It's kind of holding the 80 plateau. So does it then have the volatility of doubling in size overnight? So it's absolutely possible for Bitcoin. If you have
like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.